Starting y'all off right here on the daily. So we're currently in a reversal, so things is looking good. And go ahead and start y'all off with that. But as y'all can see, we came down here after we hit our all-time high up here around $1, right just below $1. We came down. We hit the 50 EMA perfectly, as y'all can see. Also came down and recovered all the candlesticks. Because you see all the wicks, right? The wicks is what really it determines if it already recovered the candlestick or not. But clearly we see over here to the left, right? This also came down perfectly. Boom. You see where these two ended at? Exactly where this ended at. So it literally came back and recovered this stick right here. Because over here, you can see something like this, right? You see this green candlestick? You see the way it's almost a whole thing is a wick up top. So this is confirming basically it's saying that they recovered this candlestick right here. You see? This candlestick recovered, so boom. So when it came down here, even though it already got extra, that's the extra bread or whatnot they get. But in general speaking, I mean, that's just confirming that they already covered this candlestick on this side. So they got to recover these ones right here on the right side. And that's what they did. And, gave a little extra spike just because they can. So we in reversal, as we can see, we got the 2, 3 green candlesticks are starting up right here. We may possibly get a slight rejection off the 20, but we will break through. And that might just be for today, especially after the next. I'm going to say the next day that starts, we'll definitely break through the 20. It's still possible it could break through this day. The day has already started, just so you know. That's including tomorrow. The day starts at, 7 o'clock, I believe. So, yeah. So let's go to the 4-hourly. So you get some real numbers. On the 4-hourly, it looks good. This almost looks like a pattern formation. That could be the M right here, right? You see the 2 humps, boom, boom, boom. Down here, this will be the W. Boom, this will be the first retracement perfectly. See, this right here is basically covering the gap, right? Recovering the gap. And now we're about to break through. That's why it retraces, so it'll get that money back, And also, like I mentioned before, recover some of these candlesticks, at least half of them. And then it's going to shoot back up. So basically, whenever we do make this move, it's going to come right back down here in this general area. Because this candlestick has never been recovered. This will be the new low. After we make our next pump and our next markdown phase, we coming back down here to 50 cents. No matter how high it goes, but that's probably what's going to happen most likely. But anyways, as we can see, we in the pattern. So let's say this is a W and we're in reversal. See, like I tell you from the other coins, we come out, we bust out. Boom. You see we came out, broke through the 100. Boom. Slightly rejected by the 50. Then we came back down, and now we're using the 20 as support. So we should get another jump out, right? So our next target will be right here at around 75 cents, right? And then we should get a retracement. Then boom, we should bounce off the 50. And once we do that, that should bring in 20 EMA on top of the 50. That's how it's supposed to be. And then we'll make our move up, and we'll finally break through the 75 range. And then we'll come up here around the 85 range, right? Slight rejection. I'm pretty sure we'll probably stay in the zone for a few days before we actually make the breakout at the all-time high. Or we could just come all the way up here, hit the dollar, and then retrace. But in general speaking, we're going to be in this zone before we actually break out. Because we have to tap this zone. Like I always tell y'all, market makers love doing things by 3. So this is only the first tap up here. So when we do come up here, so this will be level 1, right? Boom, rise. Right here will be level 2, retrace. Boom, rise. This will be level 3. And this is when you get to that point that I mentioned, how the way we have a level 3 rise and then the peak formation. That's what's going to happen here. We're going to have the level 3 rise, boom, right here. Slight retracement. It's probably going to just come down right here around the 87, 88 cent range. And then we're going to break through. And like I always say, the third level will continue much longer than the first 2. So we'll see a nice little move. And I can see this thing, being up around at least 225, 250 after the next full run that it takes before the markdown phase. Because that's what it looks like for this. And most of the coins is already out in circulation. So, it's basically up from here. So you're going to get a massive run. Like I mentioned before, at some point we have to recover this. And also, it wouldn't surprise me because they could technically come back down and recover if they really wanted to, just because of the fact they'll be the third time dropping down. Like I say, they love doing things by 3s. But they don't have to, because if they want to form the pattern, they'll do it now. But I'm gonna just throw it out that there's a possibility we could come back down and tap this 100 EMA around 55 cent and then shoot back up out. That's a possibility. But like I say, generally speaking, I'm actually looking for it to go up around 75 cent, slight retracement, then we'll go to our next level at 88, 85 cent. But that is what I'm expecting for crypto.com. And anything I just said is not financial advice at all. Y'all growing, y'all make your own decisions, but like, comment, and subscribe. Peace.